Hello traders, welcome back to the Forex Kick where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the unbalanced volume, the OBV. This is an indicator, a powerful tool that can help you gauge market sentiment and identify potential trends reversal. So by understanding how to effectively use the OBV in your day trading strategy, you can enhance your ability to make informed decisions and improve your trading outcome. So let's stick around until the end to learn how to leverage and take advantage and take your trading to the next level using the OBV. We start by understanding what the unbalanced indicator is. And the unbalanced volume indicator is a technical analysis tool. It measures buying and selling pressure by analyzing the relationship between price movement, trading volume. This premises behind the OBV is that it changes in volume and often presents changes in price, providing an insight into the market sentiment and potential trend reversal. And there are some key features that we need to note about this unbalanced volume indicator. The first feature is for trend confirmation. When the OBV and the price move in the same direction, this confirms the trend. For example, if they are both rising, they support a bullish trend. Now, divergence signals is the next feature we need to note about this indicator. A divergence between the OBV and price can signal potential reversals, and a bearish divergence occur when price rise but the OBV falls. This indicates a weakened upward momentum. So let's see how we can implement this OBV in our day trading strategy. We have to first start by analyzing the morning trend. We begin by analyzing the OBV during early trading hours to gauge the initial buying pressure or selling pressure. This helps in identifying potential intraday trends. A rise in the OBV in the morning suggests a strong buying interest which could support a bullish trend for a day. Conversely, a fall in the OBV indicates a strong selling pressure which may lead to a bearish trend. Now let's spot this on our chart. As we can see, this is the morning trend, and as you can see right now in real time, the OBV is trading alongside price action, moving in the same direction according to the same way price is moving. It's moving to the downside while price is also moving to the downside. The second step is to look for intraday divergence. Intraday divergence, we monitor for divergence between the OBV and price. A bearish divergence occurs when price continues to rise but the OBV decides to fall. When you spot this in your chart, you would have to note that this is indicating a weakened upward momentum. When you notice price is rising but the OBV begins to fall, this typically means that we are going to expect a weakened upward momentum. And as we can see in this area in chart, price was falling. It was falling to the downside, and if we look at the OBV, we can see at this area the OBV was rising. This indicates that at this point in time there was a bullish divergence, and we expect price to fall to the downside. Conversely, looking for a bullish divergence, it happens when price is falling but the OVG decides to show potential buying interest. This divergence can signal a potential intraday reversal. This is basically when you see price rising but the OBV decides to fall. This means that there might be a potential buying interest in the market when price is falling but the OBV is rising. So let's look for an example on the chart. As we can see in this area, price created a higher low but the OBV created a lower low. This signifies a potential divergence in price, signaling buying interest is coming into the market. The third step is to confirm with other indicators. Before entering your trade, you can use other indicators to confirm your signal. For example, you can identify a bullish divergence by looking for a bullish engulfing candle. After the divergence, you can see a bullish engulfing candle at this area or at this area to confirm the bias. This helps us to support our bullish divergence identification. Now we look for this bullish engulfing to happen to break above a resistance, and as you can see at this area, you spot your resistance at this area, and this bullish engulfing broke above your resistance. Similarly, for a bearish divergence, you look for a bearish engulfing candle to break the support level to support your short position. So as this broke our resistance, this confirms that the bullish divergence is a strong one. The next thing we need to do is to execute our trade. When you have confirmed this signal, you enter the trade. For a bullish divergence, you enter a long position. You ensure your entry is well timed, ideally during the period of high liquidity to maximize slippage. So the moment you see price breaks, you can wait for a retest of that level, of the resistance level where price broke. At this area, you will enter your trade at that area, stop loss below, then you place your take profit to a minimum of 1:1 or 1:2 as the case may be. Your tight stop losses and profit target are based on recent price action and the OBV signals. For a stop loss, place them below the recent swing low. You can place them below the recent swing low. Since price has broken this structure and retested, when price creates another bullish signal to leave this area, this is where you want to enter your trade, and you place your stop loss below the swing low. This helps us to minimize our losses and target better risk to reward ratio to your profit direction. Your targets can be set at key support levels or key resistance level, and as you can see, this is a key resistance level, so you can take your profit at this area, or you can go further in price to target a stronger resistance level such as this area in price. This can be a strong resistance level in price that you'll be looking to target, like this area. So this is how we place our entries and our stop loss. Now the sixth step is to always monitor and adjust your position. Obviously, monitoring your OBV throughout the day to adjust your strategy if the market sentiment changes. So if the OBV starts to move against your trade, consider closing your position early to limit potential losses. So while trading, you have to look at your OBV indicator to see when it decides to move against you. You consider closing your trade. Now to close your position, this step 7, ensure that all positions are closed before the end of the trading day to avoid overnight risk. This is crucial in day trading as it helps you to manage risks and prevent unnecessary losses due to overnight market movement. So at the end of the day, you should always close all the positions you entered. Now, additional confirmations or consideration, you can also use volume context. Always consider the volume context when interpreting your OBV. for a higher volume divergence and more significant than low volume ones. So when you notice your volume supports your bias, this typically means that you are in the right direction in the market. Volume has to support your bias. Where price broke out from this area, we can see it broke out with an increasing volume. So volume supported our bias. The time frame, you can use short time frame such as your 15 minutes time frame or your 30 minutes time frame to capture intraday movement. So 15 minutes time frame and your 30 minutes time frame are good to capture intraday movement. This is basically what we need to do when placing a trade using these settings. The next, we can look for a bearish setting, a bearish trade. When we spot the divergence in price and the OBV, we look for price to break the resistance region, the support area. And as we can see at this area, when price broke this support area, we enter after we see our engulfing candle. We can enter after engulfing candle, or you wait for a retest. If you enter your engulfing after your engulfing candle, we can see we are being backed by the OBV indicator, proving that it is trending to the downside. You place your stop loss just above the swing